Why your share market investing is failing. Want to know? Then watch this video until the end. Every investor has several characteristics that combine to make them successful. The degree of success depends on how well you can implement these and how well your strategy works. The method investors have for selecting shares they want in their portfolio is arguably one of the most critical areas of success. I have stuck to selecting shares that are leading, i.e., blue-chip companies whose price histories are in a long-term uptrend and that are themselves doing better than the market average. Hello guys, welcome to our channel Businessify. Please like, share, and subscribe to our channel if you like this video. The next vital component is the trading plan. This doesn't need to be overly complex, and you just need to know what you will do if the share price goes up, down, or sideways. If you can cover these three things, you have a contingency for anything the share price can throw at you. And more importantly, you will prevent yourself from reacting to sudden market fluctuations that happen all of the time. The trading plan should also incorporate an overall strategy for the share you have selected and explain why you are doing what you are doing, i.e., why you decided to place your order level at this particular point. You will need a robust risk management strategy, and to be successful in the long term, you will need to implement the strategy. The number of times I have seen people unwilling to action their risk management plan when the share price reaches their predetermined value price is a little bit scary. The above three things are great to have in place, but don't forget that you must be disciplined in implementing them. Otherwise, you are setting yourself up for failure. And you should remember that to get good at anything, you need to practice and you need to gain experience. Champions are made in training and not on the track. After identifying these strategic factors, you should consider how much you are willing to outlay on each share. To maintain a balanced portfolio, it is important to try and spend the same amount on each share, i.e., $5,000 across a portfolio of 10 shares in different industries. Finally, before deciding to go ahead with any investment, you should assess whether its risk to return is worth it. There is no point risking $1 to try to make 50 cents. Over my investing lifespan, I have stuck with a ratio of 1:3. For every dollar that I am risking, I stand to make at least 3, or if I stand to make $3,000 from a trade, I am willing to risk $1,000 to make it. The reasoning behind this ratio is that no matter how good you are, you will permanently lose in some of your investments. Having a ratio like this ensures that when investments pay off, they more than compensate for any that lose. To recap, any successful investor must exhibit these characteristics over the long term. Take responsibility for themselves and make their own decisions. They take the credit for making a profit and accept the responsibility for any losses. They learn from these decisions and improve over time. Make investment or trading plans and stick to them. They make trading plans based on reliable information in the clear, calm light of day and not emotional reactions that may emanate from the panic or euphoria of the share market. And they stick to their plan. Assess the risk/return ratio of each trade. They only enter into investments that offer the reasonable potential for profit. Manage the risk of every investment and never lose too much. Allow for contingencies in the plan to know what they will do if the share being traded goes up, down, or sideways in price. The share price can do nothing else, but you can do what you plan. The plan then dictates the actions and prevents unprofitable emotional reactions. Only put their money into financially secure companies. Buy shares when they are cheap and sell those that are expensive relative to their price trends. Only trade in companies whose prices are trending up. Trade unemotionally and have the discipline to trade the plan. They plan the trade and trade the plan. Keep taking money out of the market. You only make money when you sell shares and have sufficient confidence that has been gained from experience. Thanks for watching.